Imagine discovering a company that's achieved the seemingly impossible in today's volatile market. Zero debt in an industry where billions in loans are the norm. Now add to that a profit growth that's nearly doubled in 3 years, while its peers are struggling to maintain margins. Welcome to today's deep dive into one of the most intriguing stories in the Indian steel sector. We're exploring Kamdhenu Limited, a company that's not just surviving but thriving, with its stock trading at just 2.2 times earnings, while its competitors average a staggering 247 times. This disconnect between stellar fundamentals and market perception is what makes today's analysis absolutely fascinating.
What makes this story even more compelling is the stark contrast in its numbers. Here's a company scoring 7 out of 9 on the Piotrowski financial strength scale. That's like getting an A- in a tough financial health exam. Yet, surprisingly, its stock is trading 31% below its recent peaks. This paradox is exactly what we're going to unravel today.
Let's put some concrete numbers to this story. Their latest quarterly results show net sales reaching 190.18 crore rupees in September 2024, with a modest 2.78% year-over-year growth. However, the June quarter tells a different tale, showing an 11.53% decline in sales compared to the previous year.
The growth trajectory here is fascinating. Over 3 years, they've maintained a 5.5% compound annual growth rate in revenue. But here's the kicker. Their net profit has soared by 49.2%. This remarkable profit growth, combined with their debt-free status, demonstrates exceptional financial management.
The market's response to these fundamentals tells an interesting story. Technical indicators show bearish momentum across all time frames, with the stock underperforming the Nifty 50 by several percentage points last month. The MACD indicator sliding below the signal line adds another layer of complexity to this technical analysis.
Looking at ownership patterns, we've seen promoters reducing their stake from 57.04% to 49.83% in the September 2024 quarter. Yet institutional investors, particularly FIIs and FPIs, have increased their holdings from 6.12% to 9.57%, suggesting growing institutional confidence.
Trading volumes paint another interesting picture. Recent volume of 839,821 shares towers over the 20-day average of 328,188. This substantial increase in trading activity, paired with a price-to-book ratio of just 0.56, presents a fascinating market dynamic.
Historical patterns add another layer to this story. January has historically been challenging for Kamdhenu, with negative returns in 9 out of 19 years. The contrast is stark. January 2024 saw a remarkable 55.74% gain, while 2008 witnessed a 35.74% decline.
This narrative exemplifies market complexity at its finest, robust fundamentals and improving cash flows on one side, facing off against challenging technical indicators on the other. It's a perfect case study of how various market factors can pull in different directions simultaneously.
As we conclude this analysis, remember that markets are dynamic ecosystems in constant flux. Today's discussion provides valuable insights into market mechanics, but thorough research and alignment with personal investment goals should always guide investment decisions. Keep exploring, stay curious, and continue to delve deep into market analysis.